Hi, this is Alessio. Hope you're well. You may remember a few months ago, back in February, I mentioned this particular pattern to you. This pattern, which is also called the Jaws of Life pattern, can have an important clue for the major markets, in this case, the major stock markets. So I'm going to explain to you in this video what this pattern here on this chart is likely telling us about the major markets. For example, is it warning us that a potential long-term bear market is likely, or is it telling us that a bear market is now less likely? Join me. All right, guys, welcome back. Before we talk about this chart and what the implications this pattern, this Jaws of Life pattern is for the major markets, I want to first talk to you about what I've been saying to our members for the last several weeks about the chart, the S&P here. So let me just play this for you very quickly and we'll come back. So provided the S&P continues to remain below 4,000 or 4,068, pressure remains to the downside, and it's quite probable that we may actually test this lower support region here, this 34 monthly EMA, this pinkish line you can see here, that brings it about approximately 3830, so 3,833. And again, there's also another support level here, the 61.8% Fibonacci retracement, the potential wave 3 here. So 3,830 to 3,811 are going to be key levels of support here for the S&P. Should we continue to see more downside pressure, which is looking now likely. Dumb money confidence in the rally in the stock market has actually been very low. Low optimism and extreme pessimism, not seen since the 2020 pandemic, the 2020 crash that we had there, as we can see. Okay, so again, extreme pessimism and dumb money, which I think has got even more extreme recently. Again, these usually precede major bounces or relief rallies. All right, guys, welcome back. Let's continue. So as I've been saying in the member videos for the last several weeks, I said as long as price can remain below resistance, then it's more likely the price actually could test this level. You can see here this pink line, which is the 34 monthly EMA, a very important level on the chart here. And you can see it acts as support. We can see also the price has held the support for now anyway, and it's bounced off from this level quite nicely. You can see also on the daily chart. Here's the daily chart of the S&P, and you can see a nice move into the support zone. Again, the 34 monthly EMA here, and also the 61.8% Fibonacci retracement level, and we bounced off very nicely off these levels. Okay, so far so good. Now, also in the member videos, we warned that because this divergence, this massive spread between dumb money and the smart money confidence in the stock market, you can see this massive spread widening between the confidence of the smart money and dumb money in the stock market here. We can see that whenever the dumb money is this much depressed and pessimistic about the stock market, then this usually comes before a major relief rally or a major strong bounce on the stock market. For example, we saw extreme pessimism recently. Again, this chart is courtesy of Jason Geppert. We saw extreme pessimism recently, not seen since the March 2020 COVID crash. You can see here the last time it was this low was back in March of 2020, as we can see here. So again, whenever we see this much low optimism or extreme pessimism in the dumb money sentiment, again, this usually comes right before a major relief rally or major bounce in the stock market, as we can see here in the last several days. Okay, let's go back to the chart now of XMI. This particular chart is something I've mentioned before. You may remember a video I made back in February where I mentioned this particular chart. Again, this particular pattern you're seeing here on XMI is what's called the Jaws of Life pattern, because it looks a bit like the tool that many firefighters use, again, what's called a Jaws of Life tool. Okay, now, here's the thing. This particular chart you're seeing here, and again, I'll take a look at this zoomed in chart of XMI here in a few minutes, but in case you're wondering why am I looking at this particular chart, XMI, in fact, according to Robert Prechter, this used to be a chart that many traders would look at several decades ago. Again, it's not looked at so much these days, it's often ignored, which is one of the reasons why we look at it, precisely because it's often ignored these days. And it can sometimes give us some interesting clues. So again, the chart is called the NYSE Major Market Index, or XMI. XMI is a symbol for this particular chart. And you can see, I mentioned this, in fact, I mentioned this pattern to you back in the month of February about this Jaws of Life pattern. In fact, let me play for you very quickly what I said in that video, and we'll come back. Now, I should tell you this, guys. I'm not expecting a bear market to start early this year. Even if XMI did break down and broke below that support, those key support levels you see on my chart. Let's say it did break below the support levels here. I think it's more likely that any downside breakout could potentially be a false break. In other words, a bear trap. So for example, if XMI were to break down below support and below those key levels, again, below, for example, 2840, 2800, let's say it broke below all those levels, it's more likely we'll see a bounce back. So again, a potential false breakout. All right, guys, as you heard me say in that video from February, I said even if XMI here breaks below this supporting trend line, this yellow line of the Jaws of Life pattern, and even if it breaks this support, okay, at this level here, about 2840, and it comes down to a 200 moving average here. By the way, it came and tested that 200 weekly moving average. So I said, even if it breaks that support, these two major levels of support, it doesn't matter, because it's more likely to be a false break or a bear trap. And indeed, you can see it was. It quickly recovered, bounced back, and went inside the pattern again. So as you can see, in fact, you can see it much more clearly here. So you can see again the breakdown to the 200 weekly moving average here, and then bounce back inside the pattern. I think that the fact that XMI here managed to do this false break of support and going back inside the pattern here again, that's usually a bullish or positive sign in technical analysis. However, we should not get too excited, because again, remember, 1 week does not make a new trend. So nice green bar back inside the pattern, yes, but again, 1 week by itself does not make a new trend or uptrend. We have to see, let's see what happens in the next few weeks, because it is a bit overextended. Perhaps a pullback of some sort could happen in the next couple of weeks, and we want to see what happens with that pullback. Because here's the thing, guys, any pullback, okay, any retracement to this rally needs to remain, this is very important, any pullback must remain above this support between 2750 to 2700 on XMI. It must protect, in other words, guys, XMI must protect this support zone between 2750 to 2700 if we're going to remain in a bull market. Because if, and I say if, XMI were to suddenly drop down and, let's say, break the support zone, especially the 200 weekly moving average here and the 2700 levels here, if these levels were to break in the next several weeks, that would be a huge warning, a significant warning that we're likely entering a dangerous or indeed a long-term bear market. All right, guys, now let me just say this. I'm not expecting it to happen. So even though I mentioned that possible scenario, I don't think it's likely. So let me make it very clear that I do not believe, I don't think it's likely that we're going to break this support level here, okay? Because of the fact that we actually held this support, again, 200 weekly average, and the fact that we quickly bounced back within this range, within this jaws of life pattern here, to me, and also in technical analysis, that's usually a bullish and indeed a positive sign for the market. Now, I should say that, again, anything is possible, anything can happen. So even though I think it's less likely for the market, for the XMI here, I think it's less likely for XMI to break this support. I think it's going to hold above this level for the next several months going to the rest of this year. So I think the probability of a bear market or a long-term bear market is now reduced. Okay, so let me just repeat that. I think because of this pattern here, because of the fact that XMI held this support and went back inside this pattern, I do think this is showing to us that the probability of a long-term bear market has now been reduced. It's quite low, at least for this year. Now, next year, maybe, perhaps by the end of next year, we may potentially see signs of a potential bear market again. But I think for this year anyway, as long as XMI can remain above this support and protect this support level here, then I think the odds of a bear market and the long-term bear market has now been reduced, has been lowered. Okay, guys, so far so good. But I think for now, based on what I'm seeing here on the chart, I'm going to remain cautiously optimistic and bullish here on the markets. Again, as long as we can remain above this support region here that I mentioned between 2700 and 2750. Now, again, let me just repeat this point because it's important. If I'm wrong, and if the stock market here, if the XMI here was to break the support region, then brace for impact, because a break at that level, a sustained break that is, a sustained break below that level could potentially mean we're heading towards a long-term bear market and potentially a recession as well. It's a warning for the major markets. But again, let me just say that one more time. I don't think it's likely. I think it's less likely for the remainder part of this year. All right, guys, hope this video helps. Thank you very much indeed. I look forward to seeing you in the next video update. Bye for now.